Something just happened that's never happened before in the history of capitalism. A single company just crossed a line no one's ever crossed. $4 trillion. That's trillion with a T. Nvidia just became the first company on Earth to reach a $4 trillion market cap. To put that in perspective, that's more than the entire GDP of Germany. It's more than the combined value of every company in the UK stock market. And it happened on Wednesday, July 9th, 2025, when Nvidia's stock hit $164.42 per share. But here's what's really wild. Just 18 months ago, Nvidia was worth $1 trillion. They've literally tripled in value faster than any company this size has ever grown. Apple took decades to hit $3 trillion. Microsoft's been around since the 70s. Nvidia just blew past both of them like they were standing still. So what's driving this insane growth? One word: AI. Every single major tech company right now is in an arms race to build the most powerful AI systems. Microsoft, Google, Amazon, Meta, they're all pouring hundreds of billions of dollars into AI infrastructure. And guess what they all need? NVIDIA's chips. These aren't your regular computer chips. These GPUs are specifically designed to handle the massive computational loads that AI requires. It's like NVIDIA's selling pickaxes in the middle of a gold rush, except the gold rush is artificial intelligence and the pickaxes cost tens of thousands of dollars each. The numbers are staggering. Last quarter alone, NVIDIA pulled in $44 billion in revenue. That's a 69% jump from the year before. They're expecting to hit $200 billion in annual revenue by 2026. For context, that's more revenue than Disney, Coca-Cola, and Netflix combined. What makes this even more impressive is that Nvidia almost didn't make it here. Earlier this year, the stock took a massive hit. Trade tensions, export restrictions to China, concerns about cheaper AI alternatives, all of it sent the stock tumbling. They lost an estimated $25 billion in potential China revenue in just one quarter because of export restrictions. Any other company might have crumbled. Nvidia bounced back 74% from those lows. Think about where this company came from. For years, Nvidia was known as the company that made graphics cards for PC gamers. If you wanted to play the latest games at max settings, you bought an Nvidia card. That was their whole thing. Then CEO Jensen Huang saw something others didn't. He saw that the same technology powering video games could revolutionize computing itself. The transformation didn't happen overnight. Nvidia spent years developing their CUDA software framework, creating an entire ecosystem around their chips. While competitors like AMD and Intel were focused on traditional computing, Nvidia was quietly building the infrastructure for an AI revolution that hadn't even started yet. Now they're so dominant that they represent over 7% of the entire S&P 500 index. That's more weight than Apple or Microsoft. One company, 7% of the 500 biggest companies in America. Over the past decade, while the S&P gained 260%, Nvidia gained 35,000%. That's not a typo. But is this sustainable? Can any company really be worth $4 trillion? Some context helps here. When you adjust for inflation, the Dutch East India Company was worth over $8 trillion in today's dollars. The Mississippi Company hit nearly $7 trillion. So historically, we've seen companies reach these astronomical valuations before. The difference is, those were trading monopolies backed by governments. Nvidia's value comes purely from market demand for their products. The real question isn't whether the valuation is justified today. It's whether the AI boom driving it will continue. Every major tech company is betting it will. Microsoft alone is planning to spend $80 billion on AI infrastructure this year. Google, Amazon, Meta, they're all making similar bets. As long as that spending continues, Nvidia's the one collecting the checks. They're not resting on their success either. The company's already working on next-generation chips, like the Blackwell Ultra, designed for even more sophisticated AI applications. They're pushing into new markets, developing specialized chips for robotics, autonomous vehicles, and scientific computing. The goal isn't just to ride the AI wave, it's to make sure they're creating the next one. What does this mean for the broader market? When one company becomes this dominant, it affects everything. Nvidia's daily movements can swing the entire stock market. Their earnings reports are watched like Federal Reserve meetings. Investment funds that don't own Nvidia are underperforming those that do. It's created a situation where the market's health is increasingly tied to one company's performance. There's also the competitive landscape to consider. Right now, Nvidia has what Warren Buffett would call a wide moat. Their combination of superior chips, established software ecosystem, and massive R&D budget makes them incredibly difficult to challenge. But $4 trillion attracts attention. Competitors are pouring resources into developing alternatives. Countries are investing in domestic chip production. The question is whether anyone can catch up before Nvidia pulls even further ahead. For investors, employees, and anyone watching the tech industry, this moment represents something bigger than just a number. It's validation that we're living through a fundamental shift in how the economy works. The companies creating the infrastructure for AI are becoming more valuable than the companies that dominated the previous era. It's like watching the railroad companies of the 1800s or the oil companies of the 1900s, except compressed into a timeline measured in years instead of decades. Jensen Huang said it best, "We're just at the outset of this transformation." If he's right, $4 trillion might just be the beginning. What do you think? Is Nvidia's valuation justified, or are we in bubble territory? Like and subscribe if you enjoyed the video.